Hi guys, this is Hector. Welcome to a new video of the course. In this video I want to show you how to follow or how to perceive early signals of warning, as of how we can get alarmed or we can get warned in advance that the actual trend might be in danger or might be about to collapse. Okay. Or perhaps not to collapse, but at least jeopardize enough for us to not want to take any or not to want to search for long trades anymore on that trade. Okay. Right now you're seeing the chart for the New Zealand against the American dollar. It's the 4-hour time frame. As you can see, it's a very clear uptrend. Okay, have a look at those beautiful moving averages, nicely pointing up, parallel to each other. In fact, if we keep zooming back, you can see that this uptrend has been coming from all the way from a long time. Okay, right from here all the way up, very beautiful uptrending formation. Okay, no crossover. The moving averages don't cross over each other at any time. Price is keeping well away from the 100, spending most of the time above the 50 simple moving average, which as usual is the one in red. How price is very harmonically swinging off the dynamic area of support, which as you guys know is the area between the 30 and the 50, taking off again for a whole new swing to the upside, etc, etc. All right. Alright, but so we keep, let's assume we keep on riding this uptrend, searching for long. Some trades will be losses, most of them will be winners, since we are trading in the direction of the main trend. Okay, but now we open up our charts today. Let's assume we open our chart today and we see this. Okay, right there. Let's assume this is a live chart. Okay, this is today's or the actual, let's assume, is the current market price at this level, and let's try to read what's going on in this chart. Let me squeeze that in a little bit. All right, so we've been seeing a very nice uptrend. Every time price takes off, makes a new high. Okay, have a look how it makes a new high, retraces back down, scores a higher low, takes off once again, higher high, higher low, higher high, higher low, higher high, higher low, etc, etc. But now what do we see? We see a lower high. We can't take the previous high before beginning to retrace down to the dynamic area of support. Okay, all right, fair enough. This swing didn't really have that much momentum, did it? Now it's retraced back all the way to the area of dynamic support, to the 50 simple moving average. Nonetheless, we see that still price is not breaching through the 50. So far so good. We are technically wise still in an uptrend. So we take off for a whole new swing to the upside, but whoops, we cannot. Once again, we cannot take out the previous resistance levels. In fact, we are making a triple top. All right, triple top. All right, that's that's getting trickier actually. It's all right that one swing doesn't really carry that much of a momentum. Yes, this swing didn't. Well, it did take out the previous swing low, but barely for a few pips, perhaps 10 pips, something like that. Not really taking out the previous swing for a long run. It actually just barely peaked out 10 pips above the previous swing high before retracing again and gathering momentum once again for a whole new swing up. This could perfectly be the case here. Okay, well, okay, fair enough. We just didn't have the energy enough. The bulls were a little bit tired at this point, needed a retrace all the way back down to the dynamic area of support. then try it again, but for a third time they just cannot make it. Okay, these guys are getting exhausted. They are getting tired, and well, it's time to begin to read price action. As you guys know, one of the conditions for a healthy trend is that all moving averages are pointing in the same direction, all of them pointing in the same direction, all of them pointing always in the same direction. But have a look here, have a look at the 30 moving average there. It's totally flat, you see that? Have a look at the last portion of this chart. Okay, it's totally moving sideways. Moreover, we have a momentum break of the 50. Remember that the 50 simple moving average is the one in red. Okay, here we just have a quick pierce below. Okay, not a big deal, there's no momentum there, just a quick pierce below. Immediately after it shoots up to the upside again above the 50, same as here. Okay, we sort of like we stop the we poke the 50 very quickly for 1 bar, but immediately after we shoot back up. But here, this is a momentum breakout. Gotta read price action, guys. Price action reading is crucial for trading. Okay, it's very important. We have 2 clues here. Actually, we have many clues. I will go through all of them in detail. Triple top, we just cannot breach this level. We definitely don't want to enter long until we breach that level to the upside. Moreover, breakout of the 50, guys. Remember, I always say that the 50 simple moving average is like a cat. Okay, if you keep messing with a cat, if you keep pulling its tail and teasing him, you know, and kicking him in the balls, sooner or later he's going to scratch you back. While the 50 simple moving average is something like that. You can cuddle the 50, right? You can cuddle the 50, but you don't want to pull its tail. Okay, because you will get scratched. Don't pull its tail, cuddle him, cuddle its back. That's all right, no worries there. But if you know if you get rough with the 50 will get rough at you. So momentum breakout, flat 30 simple moving average flattening sideways, triple top. Okay, at this time it's clear that we may not want to search for long entries anymore. All right. Moreover, let's go keep on unfolding the chart and moving sideways. We are getting too close to the 50. You see that? All this time around we've been nowhere near the 50. Sorry, the 100 simple moving average. Sorry guys, I meant the 100. We've been nowhere near the 100 simple moving average. That's all right. It's a signal. Okay, it's an indication of a clear of a healthy trend, let's say. All right, when price carries momentum enough to keep pushing away itself away from the 100, it signifies that the bulls, in this case, if we're in an uptrend, or the bears, if we were in a downtrend, still have the control of the situation. They still have, they are still the bad boys on the block. Okay, they keep pushing price in their direction. As soon as that situation actually turns around and the bears continue or resume, regain, sorry, I couldn't find the right word, regain the control of the situation, price dives back down and begins to near the 100 simple moving average. Okay, well, if I was saying before that the 50 simple moving average was a cat, well, the 100 is a dragon. I was saying before how you don't want to mess with the 50. Well, you certainly don't want to mess with the dragon, do you? All right, silly analogy, I know, I apologize for that, but it's important for you guys to know that if you get close to the 100, things are running out of control. Moreover, have a look at the 30 moving average. It's already curling down. You see, that's already curling down. Moreover, the 50 is what is already flattening. Before we had the 30 moving average flat. Now we have the 30 pointing down and the 50 flattening. It's not going to take long for them to cross over, is it? Moreover, it's not going to take long for the price to breach the 100. Right? Okay, let's keep on moving, unfolding our chart and see what's happening. Okay, keep on going. Too many closes below the 50 simple moving average. All right, as I was saying, a quick pierce below, it's all right when you get 1, 2, 3, 4, 5 closes, 5 bar closes below the 100. Oh man, be careful there. Be careful, because the trend is definitely weakened. Moreover, we have a crossover there. Moreover, we finally breached the 100. The party's over. Okay. In fact, we are now ranging. We are trending no longer, guys. Trending no longer. We had been trending up to this point. Let me clean up the chart a little bit. We had been trending from up there all the way from here, okay, all the way from here. At that point, right at this point, the moving averages begin to fall in order. Actually, not yet there, because the 100 was not still pointing up at this level. All right, at this level, the 100 was already curling up, all of them pointing in the same direction, all of them parallel to each other. No crossover so far, all the way from this point onward. Okay, from this point onward, we want to be searching for long entries, long swings. You see those beautiful swings off the dynamic area of support? Okay, you see that beautiful swing information. You want to be searching for long entries there. No shorts. Okay, forget about shorts. Your moving averages are telling you to go long. So search for long entries, and all the way up to that. At this point, okay, we get clear signals that we don't want to search for long entries anymore. So we've been profiting quite a while all the way through. All right, we're definitely profiting from here. Okay, all the swing information, we've definitely been profiting most of the swings. Since we've been looking for long entries, most of our trades should be winners. Okay, perhaps we might score some losses due to, well, improper stop loss placement or stuff like that, but most of the trades, 60-70% of the trades should be winners. All right. All the way up to that, and up to here, we have clear signals in advance. Okay, we had the triple top, we had the momentum breach. This is crucial, guys. You're gonna read price action, especially for momentum breakouts. It's very important. You guys know that in stuff like, for example, stock trading or futures, you get the volume. Okay, you have the volume to analyze whether a breakout is carried in volume or not. In Forex, we don't have volume. Okay, or we don't have let's say significant volume indicator, because it's not a centralized market. So the you can't really trust on any volume based indicator. So what you've got to do in order to offset the lack of any volume indicator is to read the momentum. Have a look. This probably was a very fast bar. All right, price was dropping down like a rock here after a very nice uptrend, after a triple top, moving averages flattening, momentum breakout, crossover there, guys, crossover there. That's the confirmation, in my opinion, the confirmation of the end of a trend, or at least let's say in weakening of a trend is when we get the breach of 100 and the crossover. The party's over. Right there, the party's over. Moreover, the 50 usually warns us in advance whether we are, we might want to hold our horses. If we were up here, this was current market price, let's say, and we were searching for a long entry, and we see this very bad, massive red bar breaching through the 50 simple moving average. At this time, it was time to say, all right, man, I don't want to search for long entries anymore. Have a look. We're ranging already. We're ranging already. The only way we would consider searching for a long entry here is if we broke above this triple top once again, and the moving averages began falling in place in order again, pointing in the same direction, etc. This is not the case though. Okay, this is not the case. Not only price breaches plummets down across the 50. Not only it breaches the 100, we get a crossover. That's it. The party's over, guys. At this time, if you let's say you wake up in the morning, you fire off your charting platform, you begin searching for trades, and you pull out this chart, the New Zealand against the American dollar chart, and you see this picture. All right, just tell yourself, right, Hector, the party was very very profitable all the way through, but it's time to call it quits. Okay, it's time to say goodbye. All right, and get out of there, or simply not search for any long entries anymore. Read the moving averages, guys. Read the price action around the moving averages. Okay, have a look. Many multiple bar closes below the 50. That's important. Okay, guys, remember, this is all right. Okay, you can cattle the cat, you don't want to pull its tail. All right, many closes below the 50, it's not okay. The retracement is too strong. You want this kind of retraces, down here, down here, down here, down here. That's all right, but you do not want this kind of retracement with momentum bar to the downside. Many bar closes below the 50, and finally you get the confirmation. This is the first indication, okay, that you should be careful, that you should not be wanting to search for any long entry anymore until that triple top gives way to the upside. And this is your confirmation that once this happens, once you get the breakout and once you breach the 100, the only possible action you could take in this chart is to click on this X up here. Just click it and forget about it. The trend is in danger. The trend is not healthy anymore. You don't want to deal with the chart anymore. I don't know what's going to happen now if I scroll on my chart. Okay, I don't know if this is going to go down or whether it's going to go up. Trading, as I always say, is not about predicting the next move. It's about reacting to whatever is happening already. And what is happening right now, it's indeed a breach of the 100, a crossover, a triple top, momentum breakout there, etc., etc. Okay, I don't need to have a crystal ball and try to guess whether the next swing is going to be to the upside or to the downside. I don't care. What I do know is that this beautiful uptrend is now in danger, and therefore I don't want to put in danger my money. I just don't. Okay, I was willing to risk my money all the way up here, but now I am getting conflicting signals. I don't want to risk my money no longer in this market. Okay. All right, guys. That's all for this video. Just to sum it up, to wrap it up. Read breakouts, momentum breakouts with multiple bar closes below the 50. All right, in the wrong side of the 50. Read whether we are getting close to the 100. Okay, if you get close to the 100, be careful. That's not nice. The 100 is the dragon. Get away from the dragon. The crossovers means that the moving average are not parallel anymore, and if they are not parallel anymore, the trend is just not a trend anymore. Have a look at this chart. This is not a trend anymore. All right. Okay guys, just like I say, this was just a video to let you know how I personally signify, or how I identify the ends of a trend. Okay, I don't need to search for many trends. I don't need to draw. I mean trend lines. All right, I don't need to begin drawing trend lines. Have a look at that. Okay, we have a trend line here. If I drew trend lines, in my opinion, I would still be with the trend. Okay, you see, retesting, linking these two lows and retesting it right there. I don't know if this is going to go down or up. What I do know is that before this level, okay, before this level, I was warned here and I was warned there. Actually, just for the sake of it, let me see. Let's scroll through. Oh boy, ugly, very ugly. Have a look at that. Have a look at that. You see, totally moving sideways. Let's prolong the trend line. Okay, the actual trend line breakout happens there. All right. However, I knew here and here and here and here, I knew in advance that this trend, all that beautiful trend up there, I didn't need to wait for this breakout, which happened many bars before I got my warning signal. Okay, if you draw your, if you follow the trend by the trend lines, you got your warning here. Okay, if you follow your trend with the moving averages and reading price action around the round numbers, you got your warning there. Okay, as you can see, you know, quite a number of bars in advance, isn't it? This could have easily turned as a losing trade if you traded this bounce up here. Well, this definitely would have become a losing trade. However, if you were reading the price action around the moving averages, okay, you had the 30 flat here, like I say, the 100 being breached, the crossover, etc., momentum breakout, many bar closes below the 50. You know, it's you don't need to wait for this. You don't need to wait all the way up here. Okay, you knew here that this trend was in danger, and in fact, have a look what's happened. Have a look what's happened. It's already pointing down. All right. Okay, guys, that's all for this video. I hope you, from now on, you keep an eye on those moving averages, especially the 50 and the 100, the flattening on the 30, the crossover between the 30 and the 50, or the price breaching the 100. All those clues will let you know in advance when the trend is about to give way, or at least it's weakening down. All right. Okay, guys. Have a nice day. Bye bye.